We got this all going. Hello and happy Thursday. We are so excited to see you today. This is another Purse Strings Lunch and Learn. And we are here today to talk about credit cards. The whole month of September, almost said August, September, we are talking about debt. And we know, credit cards is part of debt. And so we're going to dive into all of that. As a quick refresher, Purse Strings is always here to provide some financial education. But then when you need a professional to help you, build a budget, sell a house, you get an inheritance, you lose a spouse, you're getting divorced, anything in life, we have professionals willing, ready, and able to serve our community of women. We call those professionals our Purse Strings approved professionals. And Katie Hetrick is here and is one of our Purse Strings approved professionals. So before we dive into all this fun, Katie, could you give a little introduction of who you are and what you do?
Yeah, sure. Absolutely. My name's Katie Hetrick. I'm located in Indiana, but I work nationwide. I call myself a financial consultant because I think financial advisors tend to get a bad rap, especially with women. I've been there before where you go to meet with a financial professional and they kind of talk at you, or they talk to your husband if you're married, whatever it might be. So I really want to walk with my clients through their financial journey. So, and I'm also very passionate about helping women, especially women in any sort of transition, be that a divorce, you're suddenly an empty nester, whatever life throws at you, just to help women really become confident and comfortable with money, because we all need money, but too few of us really understand how it works and how to make it work for us. So that's what I do in a nutshell.
I love it. Those are the exact kind of people we have at Purse Strings, because they're all about, talking to you, crazy ideas, and, hearing about your goals. So we're so excited to have you on today. And so with that, we're talking about credit cards. And so, we hear many different things. And so one of the reasons, we're here to start building credit cards is to build credit. But that means you're taking on debt. So can you build credit without accruing debt?
Yeah, you can. Absolutely. I'm going to try to share my screen here.
Yeah, pull up what you got.
Share screen.
And if anyone's tuning in and has any questions, just throw them in a chat. And we'll get those to you. If you're watching the replay, throw them in the chat and we'll try to come back to those later.
I know. Or maybe it's not going to let me. Come on, share.
There's a lot of buttons to click. I know that.
Is it? Come on. Well, it may not work. Okay, hey, then we just pivot. But yeah, so you were talking about building credit without getting credit cards. Absolutely, you can. And one thing that a lot of people, now it's getting stuck on me. A lot of people don't understand is having no credit is actually better than having bad credit. So I highly recommend taking some steps to build credit. The earlier, the better. Because you really need to have credit, even though a credit score is a relatively new concept. Everyone looks at it. Jobs even look at your credit score nowadays. So take the steps you can to build that credit. That being said, you don't necessarily need to go into credit card debt or, even take out a credit card in your own name. One thing that I recommend, and my mom actually did this for me when I was younger, is to find someone who is very good with their credit card, good at paying those off, and ask if you can be an authorized user on their account. My mom didn't even give me a card. She just put my name on the account, and she is great at paying. She pays her credit cards off every month. So her paying and just doing what she did anyway, by adding me on there, that gave me good credit when I was about 18 years old. So I started out really good, having this great credit, and I wasn't doing anything. I just kind of piggybacked off of my mom's great skills at paying her bills and keeping her credit card paid off. So that's really great. I highly recommend that for children. Just kind of start building their credit without, like I said, you don't even have to give them a card. So you don't have to worry about them, running out with your credit card and you can't pay it off. Just add them as an authorized user to your account.
And that can really help with sometimes, it's all about time. And so that can really help with the time aspect.
Exactly.
I do see that your screen sharing is able. So if you want to pull up what you want, I can then make sure it gets live on the screen.
Let's see. All right. I just pull it up.
Yep.
All right. Look at that. Okay. So I'm going to skip to where I was.
There we go. And if you want, you could go through some of this information if we didn't cover it.
I just went over me. So here we go. How do I build credit without accruing debt? Excuse me. The number one thing is always going to be to pay your bills on time. Obviously, this is going to make up 35% of your credit score. Obviously, if you can pay it off completely, that's going to be a way to build that credit without going into debt. That's not always possible for everyone. So that's why we have some other tips, like my number one there, get added as an authorized user on someone else's account. There's also, for kids, look into a student credit card. This is going to add a little bit of debt, but with student credit cards, the limit is usually a lot lower. So, your kid isn't going to be going out and hopefully getting into tens of thousands of credit card debt. They've got a smaller limit, but it's a way to build up some credit without the risk of going into too much debt. Now, flip side of that, most of these generally have pretty high interest rate. So I wouldn't get one of these for a kid that you are worried about always going out and maxing out that credit card and not being able to pay it off every month, because that interest rate can get pretty crazy. So if you have a responsible student, look into a student credit card. They often have great rewards that are geared towards college students, whatever sort of school they're in. So they are a great option. Another option is to get a secured credit card. Now, these are different than a debit card. A debit card is, I have $1,000 in my checking account. I can spend $1,000. With a secured credit card, you're going to put, maybe $500 down. You give that to Visa, whoever your credit card issuer is. They hold on to that money and they use it as security. And then they'll give you a slightly higher credit limit. Maybe they'll give you $1,000 while they hold on to that $500. That's just a way for the credit card company to kind of protect themselves. But it's a way for you to build some credit. Maybe if you have bad credit already, you've made some mistakes in the past, a secured card is a good way to get some sort of credit built up. But the number one way to increase your credit without going into any sort of debt is really going to be to become an authorized user on someone else's account. But you got to find someone. That's why it's usually great to use a parent or someone you're related to. They usually say, yeah, sure, go ahead. I'll help you out there. So I think our next question. Yeah. So just a couple of tips for while you're trying to build up that good credit. Make sure you keep the amount you owe lower than the credit limit. Obviously, you never want to go over the extended credit limit. The card shouldn't let you. Sometimes they will because they'll charge you a fee for doing that. So just make sure you keep that low. Making sure that you're lower than your credit limit, that makes up 30% of your credit score. So again, these numbers really do matter. Add different types of credit to your debt as well. Don't make sure that your debt is not exclusively credit cards. That looks very bad to your credit score. So, add some installment loans, maybe even that car loan, your mortgage, any kind of debt like that. If you add that as well, that will actually look better than all of your debt being credit cards. Keep your cards as long as possible. If you have a card, you get a card for this store that you shop at all the time, and then maybe your taste changes and you don't go to that store anymore. Keep that card. Don't close it out completely. Hold on to it. Maybe even tear up your card, but keep that card open. Because that will actually improve your credit score as well. The length of your credit with that particular bank, lending institution, that store, actually impacts your credit as well. So the caveat of that is if the account actually charges you like a yearly account fee, something like that, I would not keep it. I don't think it's worth it unless you are really working hard to build up your credit. Your credit is bad and you're trying to bump it up, and the yearly charge is low, maybe. But keep an eye on that. Some cards, especially if you do have bad credit, they will charge you yearly fees. Usually it is. So, and again, just remember that bad credit is actually better than no credit at all. So start taking those steps. If you have a child, especially they're 18 years old, think about adding them as an authorized user. Maybe not give them a card, just kind of like my mom did, just add them as an authorized user. And then they'll build up their credit without the risk of incurring all that debt.
Another great, just to jump in here, another great time where people have done that is if they're new to the country and need to build some credit. I know that they're, like their partner or even a good friend or a loved one who has good credit. And again, make sure that person actually does have good credit. It's a great way to actually help yourself out and get that credit score as well. So it's not always when your kids are young, but if someone's coming to the country, because that's a huge thing actually people face that sometimes I forget to think about.
Very good point. Yes. So I'm thinking our next question. How can you use your credit cards without negatively affecting your credit score? And I think one thing that surprises a lot of people when they find out I'm a financial professional is that I love credit cards. I use credit cards 99% of the time. But the flip side of that is I always pay my credit cards off. But there's some great benefits. You can't spit without getting a credit card nowadays that gives you some sort of, like cash back or airline miles, or, get that discount at that store that you shop at all the time. Credit cards can be awesome, but you have to use them smartly because they are one of the easiest ways to negatively affect your credit score, which again, obviously we want that credit. Bad credit is better than no credit, but bad credit can still be really hard to overcome. So, couple tips. This is kind of a no-brainer, but I gotta say it. Make sure you're making your payments on time or early. Most cards will give you a little grace window. Forget about that. Like, ignore that. Make sure you're paying on that payment due date or even before. If you are not very good at paying on time, you forget, whatever it is, consider setting up that automatic payment and make sure it's just taken directly out of your bank account. Just do whatever you can to make sure you pay on time. That's going to be the number one thing to take care of. Pay more than that minimum if you can. I know that's not always possible for everyone, but really that minimum, that's shouldn't be your minimum. That's the minimum that the credit card issuer will accept. That shouldn't be the minimum that you're going to pay. You want to pay as much as you can, preferably paying it off, but just pay off at least more than that minimum. The Consumer Federal Protection Bureau says, if possible, pay off your credit card bill in full every month. I mean, they're telling you right here, don't carry a balance if you can. That's really going to help. This is the big doozy. All right, we're going to do some numbers here. Stay below your credit limit, less than 30%. You should be using less than 30% of what the credit card company tells you that you can use. So let's say your credit card has a $5,000 limit. Pay attention to your spending, how much you've put on your card. When you get to close to $1,500, make a payment. If you can't pay it all off, that's okay. Make a payment to make sure that you stay under that 30%. Because the credit utilization is a big part of your credit score. So keep it under that 30%. That's kind of the sweet spot. And if you start approaching 30%, make some payments, get that lower, put that card up, don't use it until you consider, 20% of your credit utilization. Another big one that sadly too few people actually do, look at your credit card statement. Look at what's on there every month, because things happen. There's scammers everywhere. They are smarter than a lot of people. I don't know how they figure out how to hack into your account so easily, but they do. So, check your statement, make sure there's nothing on there that looks weird. Make sure that maybe you canceled a subscription and it's still on there. You want to make sure you get that taken care of, whatever it is. Just make sure you're going over your monthly statement. And if there's anything unfamiliar or, certainly anything that somebody, you live in Indiana like me and somebody out in California bought something on your credit card, you're like, whoa, that's not right. So just make sure you're looking at these things, and contact your credit issuer if you see anything kind of hinky on there. Again, something that people just really don't do. Report your lost or stolen card immediately. Nowadays, it's really easy. A lot of cards will even let you just kind of pause your card if, maybe you had a girls' night out, things got a little crazy, and you're like, shoot, I don't know where my card is today. You don't know if you lost it. Maybe you just didn't put it back where it goes. You can pause it just to make sure you didn't leave it at the bar or something like that. And then, if you find it later on stuck in your car, then you can turn your card back on. But be sure as soon as you don't have the card in your hot little hands, you don't know where it's located, make sure you at least turn it off if possible or report it lost or stolen. It's really easy to do. Just call up your credit card company and then monitor your credit regularly. This is another way, in addition to checking out your monthly statements, this is another way to make sure that no one's, gotten a hold of your personal information and they're, went out and bought a condo under your name, things like that. Make sure you're monitoring your credit. There's ways to do it for free. There's a lot of places online that will charge you like a monthly fee to do that. You don't need to pay that. Also, a lot of credit cards now, I believe it's like Discover, and there's another one too that's escaping me right now. They'll put it right on your monthly statement as well. They add that to the bottom. So just kind of monitor it. If it suddenly goes down and you haven't, opened a new credit card or bought a new car or something like that, that might impact your credit, look into that and really evaluate, why is my credit suddenly gone down? So make sure you're taking those steps as well. All right, moving along. I'm just asking all Maggie's questions for her, but she presented questions ahead of time, so
it's great information.
Your monthly payment. This is a big question that people have a lot, and the simple answer to that is, if you're paying in full every month on or before your due date, it doesn't matter. It really doesn't matter significantly. I'll put it that way. As long as you're paying it off in full every month. And I should add this, I didn't really add it into the screen, but add my caveat, and you're keeping that utilization below 30%. It really doesn't matter. Just make sure you're paying it off in full every month. Remember, guys, credit cards are an extremely inefficient way to borrow money for more than a month or two. That's not what they're made for. They are made for short-term loans. That's why the interest rate is so high. That's why usually credit limits are not extremely large, because these should be small amounts that you're borrowing for a few days, few weeks, maybe 2 months. That's really the point of these guys. So remember, if you're paying it in full on time each month and you keep that utilization below that 30%, we want it not even at, we want it below 30%. It really doesn't matter when you pay, as long as you pay it on due date or before. But I mean, for some people, this isn't possible, especially right now. There's crazy things going on in the economy. Inflation is insane. The price of eggs is like 3 times what it was just a few months ago, I understand. You may not be able to pay off your card in full every month. That's I'm not here to pass judgment on you. If you want to improve your credit score, or at least not hurt your credit score with your use of your credit cards, pay as soon as possible. Some people, and this is great if you can do it, if they go out to the store, use your credit card to buy your groceries, to get those awesome airline miles or whatever benefit it is, they will come home, and then that evening they'll go and make a payment, and they'll pay for those groceries, just move the money from their bank account and pay off the credit card. That's awesome if you can do that. Not everyone can do that. I know some people I work with who just pay their credit cards off every weekend, like Saturday or Sunday. That's their day. They sit there, pull up, check out their statement, see what's on there for the week, make sure it's like, yep, that's me. And then they pay that off. If you can do that, that's awesome. That's another way to help and make sure it keeps your credit. This is a big thing, though, that really, I didn't really understand this until I started working in the financial industry, is how your interest is calculated. Silly me, I figured, my billing cycle ends on the last day of the month, let's say like the 31st. I figured Chase Bank or whoever my credit card is through is going to look at my balance on the 31st, and they're just going to charge the interest on that. That's not how they do it. The banks, the issuer, will actually take the average of the balance owed that you owe on that card every day of the billing cycle. So instead of looking at day 31 or the last day of your billing cycle and saying, okay, you have $1,500 on here, we're going to charge 16% interest on that. They're going to look at every day and figure out the interest that you owe on every day. That's known as your average daily balance. Then they'll take that average and they'll apply the interest rate to that. So what does that mean for you? Let's say you have a big purchase at the beginning of your cycle. You've got that $5,000 card. You're keeping it below that 30%. So you made a big purchase of, like $1,200. Then the rest of that cycle, you don't spend any money, but you don't pay it off until the last day. That they're still going to take that average daily balance, or maybe even if you paid it off like 5 days before, it still looks like for the most of that billing cycle that you owed that $1,200. You paid it maybe 5 days early. So the sooner you can make a payment, the better for that average daily balance. That's going to bump that average daily balance down, and then you're going to have less of a balance to apply that interest rate to. So, like I said, not everybody can pay off their total. You go to the grocery store, use your credit card, you can't go home that evening and pay it off. Put $20-$40 on there. Put a little bit towards your card. That's going to lower that average daily balance, and that's going to actually lower the amount of interest that you're going to pay at the end. So even if you're carrying a balance, you can't pay it completely off every month. If you're paying a little bit every couple of days, rather than, making above that minimum, remember, but making a payment at the end of the cycle, that's going to lower that interest that you're going to have to pay. So that's going to actually be better for you than making one larger payment at the end of your cycle.
That is a great tip that I actually had no idea about.
See, I didn't either. It just kind of makes sense that, they're just going to look at one day and then charge your interest rate. Because you know what? They want to do everything they can to get as much money as they can out of us.
Of course. And I should have known. And, I'm working on paying off a card, and I was like, I'll throw $1,000 at it by the end of the month. I'm like, well, now I should do, 500 twice if I can.
Yep.
Because it would be average out.
If you get a bonus at work, take a couple hundred, throw it at that highest card. Whatever it is, any little bit is going to help with that interest rate that you have to pay. Absolutely.
Great tip.
All right. Again, a lot of us have to carry balances on credit cards, especially right now in this crazy economy. But just understand how that balance can affect your credit score, because credit scores in turn affect everything. Jobs look at your credit score nowadays. So we want to make sure that we're keeping that as low as we can, or I'm sorry, as high as we can, actually. So this is the opposite of that interest rate, because the interest rate, checking that every day and checking your daily balance helps the credit card company. Reporting your balance to the credit bureau doesn't. That helps us. So the credit card companies only do that once a month. That is, a lot of companies will do that at the end of the billing cycle, but it's not guaranteed. And the company might change their date. They could report it at the end of the month for years and years, and then all of a sudden they change their terms. Somebody somewhere decides to change it and they report in the middle of the month. There's unfortunately nothing you can do about that. It's just simply up to the credit card company. So that's one thing that is something that we just simply can't get on top of. But what we can do is to keep our balance as close to zero as possible. Because if your balance is zero, when the credit card company reports it, it doesn't matter if the next day you go out and spend that $1,200. The credit card company has already reported to the credit bureau that you have nothing on this credit card. And so your credit score is going to look fantastic. They're going to be like, awesome. She's got this $5,000 credit card and she doesn't even need to use it. That's great. So if you can figure it out, tell it. You can call your credit card company and ask. They should tell you. Not all of them will, but they should. But find out when they're going to report it to your credit bureau and make your payment the day before. Probably 2 days before. Let's make sure that the payment, actually goes through and it shows a $0 balance. But they only report your balance to the credit bureaus 1 day a month. So you only have to have it zero that one day, or again, as low as possible. If you can't get it to zero, I understand, get that as low as possible. See, but if you don't know when your balance is reported, pay the card off as soon as possible. That's another way, along with keeping your interest down. It's also going to help you keep your credit score up. Make those little payments whenever you can to get the amount on there, that balance, as low as possible, and it's going to look even better for your credit score. Remember that 30% rule. Pay off your card, or at least pay some money down if you start approaching that 30%, because that's going to, obviously that's something that credit bureau is going to be looking at. You've got that $5,000 card and you've got, $1,700 on there. They're going to be like, whoa, that's over that 30%. We're going to take some points off for credit score. So if you're approaching 30%, make even a $20, $40 payment, whatever it is. If you can, and most issuers will allow this, adjust your billing cycle so that your payment is going in the day before, or like I said, probably a couple days before they report. So that's it's smart. Just, especially if you're going to be using that direct withdraw, you don't even have to think about it. I know that my company reports on the 15th, so I'm going to have them take my payment out on the 10th. I'm going to keep it, my balance as low as possible. It's going to be a great score, great report going to the credit bureau, and my score is not going to be hurt. So even if you can't pay the card off completely, that's a great way to help it and make sure you're not going to affect your credit score negatively. Bottom line, guys, if you're struggling and you cannot pay the debt in full, don't worry so much about making that big payment, but make small payments whenever you can. You've got $20 left over at the end of the week from your paycheck, put it towards your credit card. If like I said, you get a bonus, put some money toward your credit card. I think multiple small payments are going to help you a lot more than one large payment. And also, isn't it funny that and Maggie can do this because I know her, and she is she'll stick to what she tells herself, but this is what happens to me. You know what? I got this $500. At the end of the month, I'm going to throw it at my credit card. 2 days later, I find something else I want to spend that $500 on. So, if you have that money in your hot little hand and you put it towards your credit card right away, it's much harder to find something else to spend that money on. And I'm speaking from experience because I have been known to do that.
Oh, if it's in your hand, it's being spent. I mean,
right?
I have to get it out of the account and send it to wherever it needs to go, because otherwise it is going to go into
always something out. There's something shiny
into some margarita, probably.
Attention, I'm saying. All right. So what if you're struggling with credit card debt? A lot of us, especially in our younger years, when those they come in the mail, oh my gosh, I don't know how many trees I'm killing with all the credit card offers I get. But especially, it's like once you hit 18, all those credit card offers start coming, and nowadays they come through your email. It's easy to say yes, and it's easy to fall into this debt, and it's harder to get your head above water once you do, because these interest rates are so crazy. So what do you do? How do you get out of that credit card debt? These are some personal tips from me as a former collections attorney. I say this at the end of the presentation because I don't want you to hate me. But in my past life, before I worked in the financial industry, I was an attorney. And my first job out of law school, I was a collections attorney. I was one of those people you hate. But these are some things I learned working in that. So now I'm kind of trying to make up for that, and get some brownie points by helping people not make these mistakes. The number one thing is to avoid those credit consolidation or debt consolidation companies. If you watch any sort of daytime TV, I work from home and I leave my TV on for my dog. So I'm always walking by it, and these commercials seem to be on a lot during the day. Avoid these. One thing, you can do this on your own, or maybe find a loved one that will help you do this, who is pretty responsible with money. And then you won't have to be paying another company. Usually they take a fair bit of your money just to do this. What they do is, so let's say your minimum credit card payment is $800 a month, and you just can't do that. It's outside your budget. They'll say, okay, all right, Maggie. So instead of that $800, how about you send me $400 every month, and we will work with your credit card company and we'll get them to accept a lesser payment. And then you'll be done. You won't have to pay that $800 every month. You just have to pay that $400 to us. Well, awesome. That's half what I pay right now. I would love to pay $400 rather than $800. What they don't tell you is you are to stop making credit card payments, which is going to negatively affect your credit. Your credit's going to go in the tanker. Also, that credit card company might come after you for that debt. You go a month or two without paying your credit card, they're gonna be like, hey, Maggie, where's our payment? You still owe us by now probably a couple $1,000 because you haven't been paying. And you're gonna be like, well, I'm paying this company $400 every month. They're taking care of it. And they're like, no, nobody's paying us. The debt consolidation companies just take your $400, and they'll kind of just put it in an account somewhere, and they, keep adding it up until it gets to a high enough amount that they can then get the credit card company to accept a lesser payment to pay off your card. It takes a long time. Most of these places, if you miss one payment, they'll kick you out. They charge a lot, like I said, for what they're doing. And this is these are things you can do yourself. It will kill your credit score. You may end up going into collections while this is ongoing. And the consolidation company is not going to tell you all this. So I'm here to tell you the hard and honest truth. If you are struggling, if you know someone, like we were talking about before, who could, maybe your cousin is really good with money and you're like, hey, can I just give you this $400 every month? You put it in an account for me, something that I can't touch. and then you grow the money yourself, and you can actually go to your credit card company, and they may accept a lesser amount to pay that off. That is something you absolutely can do yourself. That is going to hurt your credit score some because they are accepting a lesser amount, but don't go to these debt consolidation companies. Basically, they're a waste of money. All right. If your credit is still decent, so let's say you've made your minimum payment every month. Remember, minimum, no, we want to pay more than that, but you're struggling. All you can do is pay that minimum payment. It's really going to be hard to get on top of that credit card debt because of that interest rate. That's why we don't pay the minimum every month. But if you've been doing that, so your credit is still decent, but you're really struggling to get on top of that credit card debt, look into getting a new credit card that has a 0% interest for a certain window. It's usually like 12 to, I've seen up to 36 months. If you have pretty decent credit, they'll give you that long. The caveat is there's a limit to this 0% interest. It always does end. No credit card company is going to give you 0% interest forever because that's how they get their money. So you have to be able to pay that debt off within that period. So if it's only 12 months that you're getting 0% interest, you got to be paying off that full balance within that 12 months. So again, you have to be really consistent, really stay on top of that, or else as soon as that 12 months or 36 months or whatever it is done, that full interest amount is going to be applied to your entire amount that you still owe. So if you're not going to be able to pay it off in that short of a period of time, this doesn't make sense. But if it's, not a huge amount, but that interest rate just keeps on kicking it up and up and up, this is a good way to be able to get on top of that debt, because that interest rate can kill you.
Yeah.
The last one is to look into a loan, even if it's a secured loan, which means, it's going to be tied to your car or your house or something like that. If your credit's bad, they might need some sort of security in order to give you a loan. But look into a loan like this because the interest rate is usually going to be a lot better than what you're paying on your credit cards. That means we can get on top of the debt a lot faster than we could if we were just paying off the credit cards at like 18 or 28% interest or whatever it is that you're paying. I really recommend credit unions. They generally have a good rate for smaller loans like this. So that's a great place to start. And again, people kind of hesitate to take out another kind of debt. You're like, I'm already struggling with my credit cards. Yes, but this is going to be a debt that's going to be a lot easier to pay, and that interest rate is going to be a lot easier on your pocketbook. So here we go. Something that a lot of people don't realize. And this is only if you're really, really struggling with your credit cards and you absolutely can't pay them off. Your credit is so bad, you don't qualify for a loan at the local credit union. You can't get one of those 0% interest cards. But, maybe even you're considering bankruptcy, like you are in so much credit card debt. Something people don't realize is that in that case, it might be better to let the card go into collections. Again, this is only if you have no other options, you cannot pay it off, and your credit is already bad, because a collection is going to stay on your record for about 7 years, but a bankruptcy stays on for 10. So, it is a little bit better. And the statutory rate for a judgment, once you get a judgment in a court of law, your account goes to collections, the credit card company gets a judgment against you. That statutory rate is pretty much always lower than your credit card. Here in Indiana, it's 8%. And I don't know of a credit card that gives you 8%. You'd have to have like amazing credit for an 8% credit card. So again, this is a last ditch, effort. If you're really just like about to file bankruptcy, but the only thing you're really struggling with is credit cards, this might be a way to go. Once it's in collections, they're usually more apt to work with you and accept a lower amount and things like that. So just something to keep in mind. This is a biggie, especially for those of us who have been divorced. I dealt with this daily when I was a collections attorney. People don't understand that the credit card company is not a party to your divorce. What do I mean by that? So, you get married, one of the things that always happens in marriage is you take on some debt, hopefully not too much, but you take on some debt. Pretty much most married couples have one or two credit cards. It's going to be a joint credit card in both names. So that means, Jane Doe and John Doe are on that credit card agreement with Discover. Jane and John then get divorced. In the divorce decree, it says John's going to take over the debt of the Discover card. Jane's like, awesome. It was mostly your debt. You kind of used it. I was just on the account. Great. A couple months later, all of a sudden, Discover Bank is calling up Jane and saying, hey, this account is delinquent 90 days. When are you going to make a payment? And Jane's saying, that's not my debt. That we got divorced and John took over that in the divorce. Discover Bank doesn't care. They are not a party to your divorce. So they have a contract with you, Jane and John Doe. They were not a party to your divorce. They do not have to follow the terms of the divorce, which means a collection attorney, like someone like I was, can come after you. You will have recourse against your ex-husband through the divorce, but that can take time. And here he is ruining your credit because he's not paying off that Discover card. So just something to keep in mind, because it's something that I faced a lot and heard a lot of people, and they just didn't understand that. So if you have an amicable divorce, I don't see a problem. I'm divorced. We split up credit cards. I took care of mine. He took care of his. It wasn't a problem. If it's a very contentious divorce, you might want to put something in there that all your credit cards are going to be paid off and canceled. I know I said earlier to keep your credit cards open as long as you can, but it's better to close it than to have your ex-husband ruining your credit. So just something to keep in mind, because far, far, far too people really understand that. Too few people is what I'm trying to say. So awesome. I know Maggie's going to share my information as well, but if anyone has any questions later on, please let me know. I am always here to help. Credit cards are sadly just getting to be more and more of a problem in our country nowadays. So again, no judgment from me if you are in any sort of trouble, but I'm always here to help, as are many of our other purse strings approved professionals. Try to say that 5 times fast.
We don't. Thank you, Katie. That was so much great information. And you really covered so many great points there, which is awesome. We did have one question come in, which is a little different, but I think from your previous expertise, you might know this, you might experience this. But I think, it's common experience is you get a bill in the mail from like a medical thing, and you've moved, you didn't get the bill, went to collections, and it really hurt your credit score. You would have paid it. You just didn't know it was there.
Yes.
Is there any recommendations you'd have in that situation? Because it does seem like it would affect your credit score quite a bit.
Yeah, it will affect your credit score. Absolutely. Anytime it goes to collections, if it goes to a collection company, period, it will affect your credit. If it goes to a judgment, it will affect your credit more, like blah, 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 on and on and on. And this actually happened to me after I got a divorce. I got a bill a little bit later and I'm like, it was like $50. I'm like, yeah, I would have paid this a long time ago. Pay it. Number one, pay it. Number two, contact that company and see if they can then contact the credit company, Experian, credit bureau, whatever it is that's reporting this delinquency. Because they can then report and show, it's been paid off in full, or maybe it was an error. The credit bureau is not really going to take your word for it. Sorry. But I can tell you, I mean, I hope you realize I'm a pretty decent person and I worked in collections. So if you were to call me and say, listen, I moved 4 years ago. The hospital didn't know that. I didn't get this bill. Here, I'm sending you a check right now or whatever. I don't know if people send checks, whatever it is. I'm paying this right now. Here's my credit card. I'm paying it right now. I would be very happy to call Experian or actually, email them, whatever it might be, and let them know. We're not all bad people working in collections. So yeah, unfortunately it does happen, and it is just something that you did nothing wrong. But yeah, pay it as soon as you can and then contact that company, and 9 times out of 10, they will help you.
And then I would just assume, as you keep using your credit and paying it off, your score is just going to keep going up.
Exactly.
It takes time. It is a bitch. Like, that's the bottom line.
Nobody likes it, but yeah, you will get out. And if you pay it off right away like that or take care of it right away, it doesn't stay on your record for that 7 years. Like I said about it, that was a collections judgment. Right. That's not just, one card going to a collection. So yeah, I know it, like you said, it is a bitch, but yeah, that's life.
Yeah. That's life. Yeah. Good thing it was a small bill. You know exactly. What I mean? But Katie, so much great information. Anyone watching this live or on the replay, please reach out to Katie if you have any questions. She's more than happy to help you. Her email has been going through the bottom here. She's also one of our Purse Strings Approved professionals, so you can check her out on there. She's also killing it on TikTok, so you can follow her on there.
But 40-something-year-old on TikTok, I mean, sometimes it's hard, but we do what we got to do.
Dude, mad props. And so we appreciate everyone tuning in. We'll be back again next week talking a little bit more information about debt. And if you have questions, just reach out. So thank you again, Katie, and we'll talk to everyone next week.
Thank you.
All right. Bye-bye.
Bye.